Welcome back to another video. Soil here, and today I want to teach you a very powerful trading strategy which is based on 5 different exponential moving averages combined with RSI, Relative Strength Index. This is a short-term trading strategy and is for entering in the current direction of the market, so it can provide you a high probability trade with minimum amount of risk. Before we get started, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, as I said, we have 5 different exponential moving averages in this trading strategy. The first EMA is with length of 80. We use this 80 period EMA for identifying the major trend of the market. So when the price is above the EMA 80, we say that the market is in an uptrend or it's a bull market, and when the price is below the EMA 80, it's a bear market. The market is trending down. Then after this, we have another 2 exponential moving averages with length of 21 and 13. We use these 2 EMAs for identifying the minor trend within the major trend. If we have the 13 period EMA above the 21 period EMA, it shows that we have a minor bull trend, and if the 13 period EMA is below the 21 period EMA, it indicates a minor bear trend. It must be obvious for you that having a minor bull trend when the price is above the EMA 80 is a sign of a strong upside move, and having a minor bear trend in this situation where the price is above EMA 80 shows that the price is moving against the major trend and could possibly be a sign of a correction or pullback. The same goes when the price is below EMA 80 but in the opposite direction. And then we have another 2 shorter exponential moving averages with length of 3 and 5. These 2 EMAs are used in conjunction with RSI as a trigger for entering a trade. Actually, crossing of the EMA 3 above or below the EMA 5 supported by the appropriate level of RSI tells us whether to go long or short. Alright, now let's see how the trading signal is generated in this trading strategy. First of all, here we're going to take a conservative approach. We want to decrease our risk as much as possible, so we enter a long position only when the price is above EMA 80, and there must be at least 2 higher highs and higher lows, which defines a trend, as you know. And then the minor trend within the major trend must also be up, which means that the 13 period EMA must be above the 21 period EMA, and the same condition is applied for short positions. We take a short position only if the price is below EMA 80 and the 13 period EMA is also below the 21 period EMA. In the next step, we must wait for a pullback. The pullback must be at least to the 21 EMA level, and shorter than this, for example 13 EMA level, doesn't count because it just shows short volatility. When our desired pullback happens, then we must wait for the crossing of our shortest EMAs. EMA 3 must cross above the EMA 5, and at the same time RSI must be above the 50 level, or in the case of being in a downtrend, EMA 3 must cross below the EMA 5 and RSI must be below the 50 level. For example, here as you can see, the price is above EMA 80, and before that we have at least 2 higher highs and higher lows confirming that the major trend is up. The 13 EMA also above 21 EMA confirming the minor trend within the major trend is also up, and here we got a pullback to 21 EMA, and now we must wait for the trade trigger. Here the 3 period EMA crosses above 5 period EMA, and at the same time the RSI level is above 50, as you can see, and this gives a buy signal or opening a long position. The stop loss for this trade is placed below the EMA 21 level or below the lowest low in this area if you prefer to give it more room, and the profit target for this trade setup is when the EMA 3 crosses back below the EMA 5, and RSI also shows oversold reading. RSI oversold reading is not a must for your take profit action, and it's possible to have turning of the price without showing oversold in RSI, so always follow the price action carefully. Pay attention that here also we had this similar condition to this trading setup, but here the EMA 3 couldn't successfully cross above the EMA 5. Here again the price touched EMA 80, and one could possibly suppose that this is a pullback and the price is gonna advance after this crossing of EMA 3 above EMA 5, but the second condition of this trading strategy is not met here. EMA 13 is below EMA 21, meaning the minor trend is down, and as you can see it wasn't a pullback and the price declined. This short-term trading strategy is very effective with minimum amount of risk because we take a very conservative approach and we only enter a trade in the direction of the market. But please pay attention that this trading strategy doesn't provide 100% guaranteed signals for making profit, and it's prone to false signals like any other strategy, especially when the market is highly volatile. So you must always prepare yourself when the price goes against you and have the required measures for your risk management strategy to limit your losses for that case. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.